Welcome to the Deep Dive. Today we're zeroing in on something pretty topical. How the recent U.S. China trade situation has been, well, shaking up global supply chains.
Yeah, there's been a lot of movement, a lot of uncertainty. We've got some fresh data to look at.
Exactly. We've looked through the latest GEP Global Supply Chain Volatility Index, and also some comments from John Piatek at GEP and Stephen Edwards at the Port of Virginia.
Right, trying to piece together the picture from different angles.
Our mission today is basically to unpack what's happening right now, those immediate effects, but also, what the potential long-term shifts might be in manufacturing and trade. Trying to keep it clear, not get too bogged down.
Okay, so jumping right in, that GEP index,
Yeah.
it really shows the tariffs, President Trump's tariffs, took a big bite, is how some might put it, out of manufacturing, particularly North America and Asia.
A big bite, yeah.
Yeah.
I think a sudden slowdown. The index mentioned a steep retreat in buying activity in April. Was that after a period of stocking up?
Uh-huh. It seems companies did some stockpiling first, maybe anticipating the tariffs, and then, bang, a sharp pause in April. Almost like a collective holding of breath.
That lines up with what John Piatek from GEP observed, doesn't it? He said the pause on tariff hikes brought major relief.
Yeah, major relief for manufacturers in both the U.S. and China. And interestingly, the index also showed manufacturing demand in China had already started to fall off a bit.
Right. And Piatek also noted U.S. manufacturers did that aggressive stockpiling of key inputs you mentioned, trying to build a buffer against the tariffs.
Like filling the pantry before a storm, basically. But, Piatek makes a really crucial long-term point here.
Which is?
That even if they sort out a trade deal, this whole episode has made U.S. manufacturers pretty anxious about relying so heavily on China. The long-term risk calculation has changed.
That makes total sense. All this rapidly changing landscape and uncertainty, as he put it. It's got to be making businesses hesitant about big investments, planning their supply chains.
Definitely. And that's where the GEP index itself is so useful. It's not just one thing. It tracks demand, shortages, transport costs, inventories, backlogs.
So it's a broad snapshot. How do they get that data?
It's a huge monthly survey, something like 27,000 businesses. So it gives a pretty robust picture of what's happening on the ground.
Okay. And Piatek sees this volatility index as sort of a warning signal, like this is what could happen again if the tariff pause isn't permanent.
Exactly. He specifically pointed to that April data. In North America, you saw this hockey stick jump in stockpiling, aggressive inventory building.
A hockey stick, so sharply upwards.
Sharply up. But he raised concerns, is that sustainable? Probably not at that rate. Meanwhile, over in Asia, purchasing activity was actually at its weakest level since December 2023.
So quite a contrast there. What about Europe? Are they caught in the middle or is it different?
Europe's a bit different, yeah. The index suggests maybe their industrial recession is easing up. Germany and France showing some growth.
Oh, that's interesting.
But there's a catch. The UK, which, had that early preliminary trade deal with the US, it's actually showing weakness. And Piatek cautions this European recovery could reverse pretty quickly if global trade worsens overall.
Right, it's all connected. And the index also showed more spare capacity in Asia, like factories weren't running full tilt.
Yeah, especially in China, Taiwan, South Korea in April, suggests maybe the orders just weren't quite there or they were anticipating slower demand.
Which leads to the question, if not China, then where? Stephen Edwards from the Port of Virginia had some thoughts on that, didn't he?
He did. His perspective is really interesting. He's seeing potential growth for his port if supply chains continue shifting away from China. They're positioned for increases from, say, Southeast Asia, South Asia, even Europe.
And he had data to back that up?
Apparently, yeah. He said the fastest growth for their port over the last 4 years came from the Indian subcontinent, Vietnam, and Europe.
Wow. But China's still a big player for them.
Oh, definitely. Trade from China has been flat for them for 4 years, he said, but it's still their second biggest trading bloc, right after the EU, so it's not disappearing overnight.
But the trend seems clear in his view.
Yeah. Edwards believes the future involves, quote, less China and more from Southeast Asia and Europe, and he sees his port benefiting from that shift. It's a good example of how these big trade wins can really reshape things locally.
So let's try and pull this together. The trade tensions have clearly caused significant, volatility in supply chains. Immediate reactions like stockpiling, then pausing.
Right, short-term adjustments, but also these bigger, longer-term strategic thoughts about diversifying away from China, managing risk.
It really underscores how interconnected global trade is. Policy decisions in one place have ripple effects everywhere, manufacturing, shipping.
And eventually, the things you buy, the prices you pay, it all links back.
So for you listening, maybe think about how these large-scale economic shifts, these global currents, might even indirectly touch your own world, your work, your interests. It's a reminder that these big headlines often have, closer connections than we might think.
Definitely something to keep an eye on.
Thanks for taking this deep dive with us. Welcome to the Deep Dive. Today we're digging into the world of maritime transport.
That's right.
Specifically, looking at some pretty interesting shipbuilding orders from COSCO Shipping Bulk. They seem focused on ammonia and methanol-ready vessels.
Yeah, big stuff happening there.
So our mission, really, is to figure out why a huge company like COSCO is, betting on these alternative fuels, and what that tells us about where global shipping might be heading, without getting lost in all the jargon.
Exactly. And we've got news about COSCO Shipping Bulk placing these orders with Qingdao Beihai Shipyard.
Okay.
It's for 209,800 UWT ammonia and methanol-ready bulk carriers. Delivery scheduled for 2027.
And DWT, just quickly, that's deadweight tonnage,
Yep.
basically how much stuff the ship can carry.
Precisely. It's all about capacity.
Okay, so let's unpack this a bit more. These new orders, they come after another one, right? I think back in December 2024.
Correct. That was for up to 8 similar ships, 210,000 tonners, also ammonia and methanol ready. Those are due between 2027 and 2028.
And they're Newcastle-type bulk carriers, which are like the big workhorses, about 300 meters long.
That's the type, large vessels. And interestingly, the specs mention they're still including conventional energy-saving tech.
Like what?
Things like front guide wheels, vortex-eliminating fins, and also shaft generators.
Shaft generators,
Yeah.
where the main engine helps make electricity for the ship.
Exactly that. Standard efficiency measures alongside the future fuel readiness.
Right, that ammonia and methanol ready part. That seems like the key thing here. What does that designation actually mean in practice?
Well, it's a really clear signal that COSCO is thinking long term. These fuels, ammonia and methanol, they offer a path to much lower emissions than, traditional bunker fuel.
Cleaner fuels, basically.
Potentially much cleaner. Ammonia, for example, could be almost zero carbon if produced sustainably. So being ready gives them flexibility. They can adapt to the ships as the infrastructure and the rules around these fuels catch up.
So they're not necessarily running on ammonia day one, but the ship's built so it could be converted or adapted later.
That's the idea, future-proofing the asset.
Okay. And the shipyard Qingdao Beihai, they seem to know what they're doing in this area.
It looks like it. Our sources highlight they actually delivered a similar ship, a 210,000 DWT ammonia-ready bulk carrier, just this past April. The mineral spherage.
Ah, right. For CMB Tech, a Belgian owner.
That's the one. Also around 300 meters long, and importantly, that ship met the IMO's Tier 3 emission requirements.
IMO being the International Maritime Organization.
Mm-hmm.
And Tier 3, that's a big deal for emissions.
Huge deal. It means over a 75% cut in nitrogen oxide emissions. NOx. Really harmful stuff.
Wow.
So delivering that ship, the mineral spirit, it really shows Beihai has hands-on experience with this specific ammonia-ready technology.
Okay, this is where it gets really interesting for me. Why are COSCO and others like CMB Tech pouring money into this now? What's the big driver?
Yeah, it's the crucial question, isn't it? There are probably a few factors pushing
Like regulation.
Definitely. There's growing pressure, regulatory pressure to decarbonize shipping. It's undeniable. Plus, just the long-term questions about the cost and even the availability of traditional fuels.
Mm-hmm. Makes sense.
So future-proofing their fleets like this, it's a strategic move. It gives them an edge, potentially.
Is there any downside, though, to being ready for multiple fuels instead of just picking one and going all in?
That's a fair point. Being ready might mean the initial design is a bit more complex, maybe slightly more expensive up front compared to just building for one specific alternative fuel. But it buys that crucial flexibility in an uncertain market.
So it's like a strategic hedge.
Mm-hmm.
Betting on flexibility because the future isn't totally clear yet, environmentally and economically.
You could put it that way, yes.
So for you listening, maybe you're not involved in shipping day to day. Why should this catch your attention?
Because this isn't just about shipping. It reflects a much, much broader trend, a global shift towards sustainability that's happening across, pretty much all industries. These ship orders, they're a very concrete, very large-scale example of how major industries are trying to adapt to environmental challenges, exploring cleaner energy. It's a peek into how massive energy transitions actually happen on the ground, or, well, on the water.
Yeah, absolutely. Okay, so if we had to boil it down, what's the main takeaway from our deep dive today?
I think the core point is Costco shipping bulk, making these significant investments in ammonia and methanol-ready ships, coupled with Qingdao Beihai showing they can actually build them. It signals a very real, very serious exploration of cleaner fuels in the bulk shipping sector. It's a strong indicator of where things might be going.
A definite shift, or at least the preparation for one. And it really makes you think, doesn't it? What other sectors, what other industries might be quietly getting ready for similar transformations as the whole world tries to cut emissions and find new energy sources? What sort of surprising innovations are we going to see pop up in the next few years because of this push? Definitely some food for thought. Thanks for joining us for this deep dive.
Welcome to the deep dive.
Great to be here.
Today, we're plunging into the pretty turbulent waters of global shipping. We're looking at how U.S. trade policies are, well, making waves. We've got this report on global shipping,
That's right.
and it highlights some, serious headwinds. Think tariffs, upcoming docking fees for ships built in China.
Exactly.
Yeah.
And our goal today really is to kind of navigate these complex issues
Right.
and pull out the key insights for you, basically, what's going on and what it might mean down the line.
Okay, let's dive in. The report talks about twin threats to global shipping. What exactly are we talking about there?
Okay, so the first one is the existing stress.
From previous policies.
Yeah, exactly. Previous U.S. trade policies, the tariffs already in place. They've definitely taken a bite out of cargo volumes already.
Okay, so that's one.
The second threat, and this one's maybe more immediate, is the looming introduction of these new docking fees.
Ah, the ones for Chinese-built vessels.
Precisely. And they're scheduled to kick in this October.
Okay, twin threats. So how are these two things combined hitting the global shipping industry overall?
Well, we're already seeing a clear link, between the U.S. China trade tensions and just less stuff being shipped.
Yeah.
Lower cargo volumes.
Right.
And the expectation, the concern really, is that these new docking fees will just suppress activity even further.
How so? Like, what's the mechanism?
Think about it if it suddenly costs a lot more for a huge chunk of the global fleet, specifically ships built in China, to dock in U.S. ports. That cost has to go somewhere. It'll likely get passed on, or maybe companies just decide it's not worth it, detouring their ships altogether.
That makes sense. Now, the report specifically mentions German mid-sized shipping companies. It says they're particularly vulnerable. Why them?
Yeah, there are a few reasons for that. First, unlike the huge industry giants, they tend to operate smaller fleets,
Okay.
which just gives them less flexibility, less wiggle room to adapt when the market shifts like this.
Less resilience, sort of.
Exactly. And the German Shipowners Association, they've apparently already seen a drop in chartering activity.
Oh, really?
Yeah, and weaker demand specifically for container ships on those really important China-U.S. routes.
Yeah.
So they feel these fluctuations much more directly.
Okay, let's focus on these new U.S. docking fees for a second. What are the key details we need to grasp?
Well, they were initiated under the Trump administration.
Right.
And the stated goal was basically to push back against China's really strong position, its dominance in shipbuilding.
And how are they supposed to work?
The report suggests they're designed to impose, and this is the term they use, substantial costs
Substantial costs. Okay.
on any ship built in China that wants to call it a U.S. port.
That sounds like a pretty major lever to pull. What are the potential ripple effects? What could happen?
Well, one very real possibility is rerouting.
Ships just going elsewhere.
Yeah, if the docking fees get too high, shipping lines might just calculate that it's cheaper to bypass U.S. ports completely.
Wow. That could really shift global shipping patterns, couldn't it?
Absolutely. It could lead to quite significant shifts in those established global routes.
Has that started happening? Or are other ports picking up the slack?
Well, interestingly, the report notes that major European ports, like Hamburg for instance, haven't yet seen a big surge in activity,
Oh.
which you might expect if ships were just diverting from the U.S. It kind of suggests maybe a broader contraction in shipping, not just a simple geographical shift.
So it's not just ships choosing different ports. It might actually mean less shipping overall, at least on certain key routes.
Precisely, yeah. And that really feeds into this feeling of overall industry uncertainty.
Makes sense.
There's a lot of anticipation, maybe nervousness about potential further changes in U.S. trade policy. Businesses are definitely concerned about the wider implications for global trade.
Okay, so let's try and sum this up. We have a global shipping industry already feeling the pinch from existing U.S. trade policies. Now bracing for another potential hit with these docking fees coming in October for Chinese-built ships.
That's it.
And German mid-sized companies are kind of in the hot seat because of their smaller fleets and their reliance on these specific trade routes.
That captures it well. And the key thing to remember is, these aren't just abstract policies. They have real, tangible effects on businesses, on the flow of goods worldwide.
Absolutely. And that brings us to a final thought for you, our listeners. Given all these pressures mounting on global shipping, how might international supply chains fundamentally adapt or reshape themselves in the long term?
Yeah, and what sort of unforeseen consequences could bubble up from these pretty significant shifts in trade policy?
Definitely a complex picture, lots of moving parts to watch. Thanks for taking this deep dive with us today.
Okay, let's unpack this really interesting situation developing around Tesla. It's like, imagine trying to build these futuristic vehicles, and bam! Global trade just throws this massive wrench in the works.
Exactly. That's pretty much what happened. And now we're seeing things shift again.
Right. The key thing is Tesla's planning to restart shipping components from China back to the U.S.
Yeah. And the source material we're looking at really gives us the inside track on this. It highlights how these big global factors manufacturing trade policies are directly hitting production for things like the Cybercab and the Semi.
Okay, so for you listening, our mission here is to get why this is happening now. What does it mean for Tesla's, pretty ambitious plans, and maybe what it signals about the bigger economic picture.
Definitely.
So the article says Tesla's gearing up, ready to restart these shipments from China later this month. We're talking May 2025.
And these aren't just any old parts, right?
No. Crucial stuff for getting the Cybercab and the semi-truck actually built.
And the backstory is, it's pretty key here. This restart, it's tied directly to the U.S. China trade situation kind of cooling off a bit.
Fine, yeah.
Apparently there were talks in Geneva recently, and that seems to have led to pulling back some of those tariffs.
Which is huge, because didn't they stop because of a massive tariff hike initially?
Oh, yeah. The article mentions a staggering 145% increase on Chinese goods. Tesla basically hit the brakes on shipping then. I mean, that kind of cost just changes the whole calculation.
145%. Wow. Okay, suddenly resuming makes a lot more sense. So this tariff rollback is basically the green light they needed.
Pretty much. It allows them to get those vital components moving across the Pacific again.
And that directly feeds into when we might actually, see these things on the road.
Precisely. The source indicates Tesla is now targeting this October, to kick off trial production for both vehicles.
Both the Cybercab and the Semi. Okay.
Yeah. And then following that trial phase, the goal for actual mass production is 2026. So you can see how critical restarting these shipments now is for hitting those dates.
It really shows how sensitive these huge manufacturing projects are to shifts in global trade winds.
Absolutely. It's fascinating, isn't it?
And just so we're clear on where the rubber meets the road, so to speak.
Yeah.
Cybercab production is set for Texas.
That's right, Texas. And the semi-truck production is planned for Nevada.
Got it. So these parts coming from China are heading straight for those U.S. factories.
Exactly. And if you sort of zoom out, look at the bigger picture, it just underscores how interconnected everything is globally.
Yeah.
A big tariff decision in one part of the world can, slam the brakes on production plans thousands of miles away.
And just like that, a step back, a de-escalation, can get things rolling again almost overnight.
It's a really clear example of how international trade policy is, a major lever influencing manufacturing, especially in these cutting-edge tech sectors like EVs.
So for you, the listener, it means that things happening in, say, Geneva trade talks can actually affect the timeline for that new electric truck or taxi you've been hearing about.
That's the bottom line. It connects seemingly distant events to the technology that might end up in your driveway or city.
So the key takeaway for you watching this unfold is really understanding this deep link. The journey of an EV, when it arrives, where its bits and pieces come from, it's all tied into these global economic and political currents.
Which brings up something to think about, doesn't it? How might future shifts, more friction or maybe more cooperation on trade, how will that continue to shape innovation and even just the availability of these new technologies going forward?
It's a constantly moving target.
Yeah.
Okay, so just to quickly recap for everyone, Tesla's restarting component shipments from China this month. Big deal for Cybercab and Semi.
Made possible by that trade de-escalation, the tariff rollbacks.
Trial production now eyed for October. Mass production in 2026, happening in Texas and Nevada.
Right. And maybe the final thought to leave you with is just consider how those high-level decisions, trade negotiations between countries, really do ripple outwards. They have a tangible effect on the tech shaping our future, how fast it develops, and how accessible it becomes. It really drives home how interconnected our world is now.